You know how this normally goes. Post them up in the chat. If you got anything specific, concept related or psychology related, we can go over from the previous week or just in general. I'll go through probably one setup from this week that I liked, and then I'll post it on YouTube. Otherwise, we'll probably have it on a longer one on Monday, just given the amount of people who are present today. So if you got anything of interest, put it in the chat. Otherwise, I'll go over, I think it was Wednesday's setup from NFP, not NFP, CPI. That was probably the best one in my case from the week. So if you go over to the hourly chart. Now the hourly chart, I think overall has been, daily bias has been a little bit more difficult recently. First week of September, the past 2 weeks, I think were a little bit more difficult. But with CPI, obviously CPI, looking for an entry between 8:30 and 10 o'clock, more preferably 9:30 and 10 o'clock. Now, if I pull up the bias from that day, the hourly chart is going to be extremely, extremely important for the bias. This was going into Wednesday. Never mind, not this picture. This picture. This was Tuesday's. Oh, I can't paste it. Never mind. So I had a bullish bias going into the hourly chart. Now, if you're struggling with bias, the two that I would say to use is just the daily chart and the 1 hour chart. It's really going to be the only two that you need. Then you can obviously cycle down to the 15-minute chart, and I'll go over exactly what you're looking for on the 15-minute chart. But in here, market maker buy model, you're looking for at least one market maker model to complete within the week. Now, depending on the week's expansion and what news profile we have during that week, obviously you can get different weekly profiles. But here we had buy side, also this daily imbalance. Now, failing to deliver, if you look on the daily chart, failing to deliver fair value, meaning we don't get any respect out of the fair value, we're going to reach for liquidity. So if we trade through this and close through, we're going to reach for a liquidity pool next. Same thing with this. We're trading through this. I'm expecting that the buy side from a couple of weeks back, all that relative equal buy side is going to be met going into next week, possibly even up into here. So draw is bullish. So really on the daily chart, I'm looking for PD arrays. Swing high, swing low, fair value gap. What can we get from there? And then obviously out of all those specific PD arrays, there's going to be a 1 hour market maker model that you can frame on each one. So Wednesday was basically the weekly low, weekly manipulation below the relative equal sell side down here. And if you go into the 15-minute chart, and obviously I can go back even further. But if we drop into here, the news profile or the daily profile, I guess you're looking for is, if you're familiar with Ephesians daily profiles that he mentions from ICTs own content, this is a daily Judah swing. Your midnight opening price is here. We don't really have any manipulation in London. So whenever you see a lack of manipulation in London, where London has not formed the high or low of the day, you want to anticipate some form of a New York session reversal. So as we're trading up in here, news comes in, manipulates low, fails to take out low of the day. And then as 9:30 hits, looking for that entry within the time frame. And I've mentioned this before as well, but if you're trying to frame a setup on the 1 minute chart, which I really don't think that the 1 minute chart is for everyone, I would say if you're new to ICT trading or even new to the AM session, just start looking at the 3 minute and the 5 minute. It's really all you need. But the 5 minute order flow is extremely, extremely important in the sense of I'm looking for at least one of two things, either for an inversion gap to be formed on the 5 minute chart that shows me that the order flow is holding in that direction, or a change in the state of delivery. Obviously, if we have both in this case, it's even more strong. But you want to be trading in the direction of the 5 minute, preferably at a minimum. The 5 minute order flow is where you need to be trading towards. 15-minute order flow, obviously, can be helpful, but sometimes not. It won't be clear all the time where the 15-minute is likely to go to. So trading the direction of the 5 minute, extremely important, and then waiting for some form of reversal structure on the 5 minutes can be important too. So if we go into the 1 minute, look at the 1 minute chart. We got 9:30 open here. 9:30 open basically creating the high of that power of 3 between 9:30 and 11. And we also have our timed high and low within the session too. But a lot of people say you can't trade CPI. It's not true. You just want to be waiting for after the news release. So after we get the change in state of delivery through here and through the inversion fair value gap, you get a retracement here at 9:38. And then we have also this fair value gap that price trades into during the macro time. We have the data lows, and then obviously the daily low down here, and also the previous day low down here. So this is probably the most optimal setup I think you could have framed. And I think the ones that you're going to be the easiest kind of trades in the morning are always going to be when the New York session reverses. Okay, that's like optimally the easiest one in the beginning, because you're going to be able to see exactly where that low resistance liquidity is, where the left side of the curve, and it's going to be right before the New York session, right? So you're going to be favoring to trade these kind of days, New York reversals. Continuation days are a little bit harder, because sometimes if we have a classic buy day, for example, you'll get something like this. It traces into New York, and then maybe you have a little bit of low resistance here, and then PD array, and then New York will expand, and sometimes we're reaching for external targets on higher time frames. This is a little bit harder to trade, but this one's a little bit easier. So I went short, I think, on the 952, 953 candle, took it off on the data lows. I'll see if I can find that screenshot quickly and post it here. So this is from Wednesday's price action right here. So short, right on the 953, and then took it off basically on the data lows. Obviously, hindsight could have held it into time. 10:30 to 11 o'clock, perfectly making that low of the session, and then we reverse all the way back up into the high of the week, going to Thursday and Friday. But that's just something to look at. Just joined on YouTube. Now I've joined your Discord to tell you you're the big G. Thank you, man, for sharing a lot of value for others. I appreciate that, man. Thank you. Yeah, 950 to 1010 macro is really the only macro you need. Highest volatility out of any of the macros during the day. I recall you saying you can usually get 2 to 3 clean ATM setups a week. Do these setups line up with the expansion / distribution days? If you're talking about like during the week, yeah, I mean, they normally form on Tuesday, Wednesday, Thursday, right? That's typically when you want to see the distribution on the week. That being said, it really is just dependent on the economic calendar and those higher time frame, PD arrays just lining up. So next week we have basically, I would say almost every single day next week is decent. It's not, none of them look low probability. We have news on every single day, except maybe FOMC day. The New York session before FOMC. It's gonna be a little bit more difficult. But yeah, I mean, if you really think about it, you only need 2 to 3, 1 to 2 setups a week is all you really need. And I've talked about this before, but a lot of times we make it harder than it is, myself included, thinking that you need to capture a trade every day or multiple trades every day. And a lot of that comes from comparing yourself on social media to other people who are at step 10 when you're at step 4. So when you really put it in perspective and you only need X amount, per month or X amount per week, and how you can break that down into whatever your weekly targets are. I really don't think you should have daily targets. Having something like a daily target in the beginning is not going to be helpful, because then you're going to be trading P&L on those days instead of trying to trade execution. So having a weekly profit goal or a monthly profit goal is going to be most beneficial to anyone starting out. A lot of people trapped by the TGF profile for this end of the week, and the only reason I was able to make a win trade of Friday is because I had a classic expansion weekly profile. It's not going to see it. Good stuff. Please remind us on the relation between the highs and lows in time. Sometimes you say, for example, I'm looking for a high or low at 10 to 10:30. Okay, so for the New York session, you can basically have two. Let me see if I can zoom out here. You have two kind of open, high, low, close profiles. So when you understand that every single session, candle, whatever, all revolves around the formation of a single candle, it becomes very easy to understand what price is going to do. It's only going to do one of two things in the most general sense of things. So the daily candle will either look like this or it'll look like this. And same thing with the New York session. So now on a day where maybe we don't have 8:30 news, or even if we do have 8:30 news, the most classic timed highs and lows that I'm looking for are relative to basically the opening range and then London close. So if I'm bullish for the New York session, so say I come to my higher time frame, I have a assumption that, okay, we're likely to see higher prices. I'm looking for these time dynamics to form, where 9:30 to 10 creates a low, 10:30 to 11 creates a high. Same thing on the other side, right? 9:30 to 10, 10:30 to 11. So it's really simple. It's not like you can precisely find exactly what time it's going to reverse at. I think there was a graph that I posted in notes and PDFs if you want to look at like the chart visualization of SMR time window. Basically, what times the market reverses. And if you look between basically 9:30 and 10 o'clock, it's around or over 50% of the time we reverse. Sometimes we'll reverse before that, but if you look at the times we reverse after 10 o'clock, it's going to be basically like 30%, and that may be even after there's actually a clean move within this time window anyway. So if you're looking for these time dynamics, it's quite easy, I think, to find continuation entries, but also just trust that once we put in a higher low, we've broken structure maybe on the 5-minute chart, now I'm trusting that that higher low is protected in a sense, especially if we have something like SMT, because SMT is required for the market to reverse. Then I'm going to trust that maybe the next fair value gap, the next whatever entry technique that you could find is going to hold in the direction of price. Okay. That doesn't mean it's not always going to happen, but then you can maybe frame that with the London session as well, right? If we're looking for the daily profile to be a bullish day, well, then if London created the manipulation at the low end, then you want to see New York expand. And it's just kind of a fractal open, low, high, close, open, high, low, close. Still holding ES. That's a crazy, what is that R? I like to see the execution on that. That's crazy. But anyways. But going back to like what I was talking about before of finding what your weekly and daily goals are. Your daily, like, this is all more psychology, but daily like tasks are going to be what gives you the goals that you want. So if you have a goal, a monthly goal or a 90-day goal, maybe your 90-day goal is hitting 10K per month. Okay. You have to break it down into steps. Okay. How much capital do I need? How much is my monthly target then? How much is my weekly target? Then if that's your weekly target on those days, what do you have to do to accomplish the weekly goal? And I talked about this in the treating trading like a business video. But really like actually sitting down and breaking down the goals into like actual steps, I think it makes it way easier during the day to be psychologically flat, like you don't have any emotion when you're trading, or at least minimize it to the point where you can execute on a really, really clean slate, where you don't have any emotional buildup from yesterday, you don't have any expectations for the price action, and it's much easier to execute when you actually have a clear goal and what you need to actually achieve that goal. Not trying to trade the P&L on a day-to-day basis and just get green, but rather just take the steps that are necessary, where then maybe even if you lose, you know, okay, I still have 3 opportunities left in this week to be green on the week or green on the month. I'm not going to worry about this one loss, and you journal it. And the next video I think I'm going to post on YouTube is how to properly lose. That's going to be a big one. Like it'll probably be like a good 10-15 minute video. But how to lose properly, because for some reason no one talks about this. And the people who do talk about it, it's just kind of put down. Like ICT talks about it a ton, but yet you rarely kind of see those clips on YouTube or those clips on Twitter or whatever. But I'm gonna try and put out like a video of basically how I lose, like what is the process I take of losing, and what do you do after, what do you do before. All that stuff is really, really important. Yeah, the stream is going to be posted on YouTube. It'll be unlisted, so I'll send the video out into YouTube vids once it's finished. But you can expect that video sometime next week. What are your rules for going break even? I don't have any set rules for going break even. Normally, once I take a partial, I like to be in break even, but it's all dependent on market structure when I'm trimming my stop. So I like to keep my stop exactly where it is, accept the risk, up until there's a reasonable point where I should trim it. Now, the easiest way to trim stops is going to be if you're long, whenever you see a retracement leg and we break through that retracement leg, then if our stop was here originally, then we can move it up to here. And then say we have another retracement leg down, and we break through this swing high that created the retracement leg, then you can move it to here. It's going to be the easiest way to trim stop, not using the 3 PDUA rule. I think in the beginning, that's the most bogus rule you could try and follow, especially if you don't understand exactly which 3 PDUAs you're even looking for. So trimming stop is just going to be something that, unfortunately, you have to learn through experience of where you like to trim it. This is going to be the easiest way. Same thing if you flip it upside down. If we continue to retrace, break through that leg, you trim it. Retrace, break through that leg, trim it. I don't have any specific rules of like, okay, if we move 10 points, I'm moving to break even. I think anyone who does that doesn't really understand their entry model or really can accept the risk. If you're moving your stop to break even, as soon as you get somewhere in profit, you're using way too big risk. Okay. But normally if I have, say I have 2 contracts on, 2 micro contracts, for example, on demo, if I take my first partial and we're already like 50 points away, I'm gonna move it to break even or anywhere in profit that would make sense structurally, where I wouldn't want to take a loss after take first partial. Like for the most part, after you take a first partial, stop should be in break even if the structure allows it. I think that would make sense for most people. But obviously, if you're taking partial at 20 points and your stop is still not at a point where you can move it comfortably, then you don't move it. A lot in the beginning, a lot of it is just going to be accepting the risk of just you keep your stop there for the entire trade. You don't move it because in the beginning you're not going to know when to move it. Then eventually you get used to, okay, this is where I trim it, and it becomes a little bit easier. But that also comes with, if you're learning to trim stop, it's hard because then you have to accept that there's going to be some times when you're taking a demo trade, you trim the stop, you get stopped out, and then it continues to move your take profit. You have to expect those kind of things and how you're going to deal with them instead of just kind of going and blindly accepting that, okay, I'm going to trim my stop this time, and you get stopped out. You know, not having a kind of game plan to deal with that is going to be detrimental. Can you also talk sometime about how not to overcomplicate trading and keeping models simple? Maybe we talked about that before, but on video, but that would be great. Yeah, sure. I can try to. It's definitely like a broad topic. But yeah, if you haven't checked out trading like a business, that's going to be important. And then a lot of it just comes down to journaling as well. But yeah, I'll try and incorporate some of that into the next video too. What did you say earlier about higher time frame market maker models every week? Okay, so preferably you're looking for 1 hourly market maker model during the week. Okay, so if you play out every single week, basically you'll see there's about 1 during the week. Like if I try and mark out the daily separators, but every week there's about 1. Like here's 1. You'll see there's almost 1 every week. But basically it's just going from daily to the hourly chart. So if you're struggling with bias, just use those 2. The easiest way to find bias is just daily, hourly. You can incorporate the 15 as well, but I think it's helpful when you're looking at session dynamics. But like I would say, you know, if you're struggling with it, you don't have to incorporate things like the weekly in the 4-hour or the monthly. Because in all honesty, depending on what you're trading, if you're swing trading, sure, that's important. Or if you're looking for to capture the weekly expansion, that's important. But if you're trying to just trade the session, the New York session, you need to understand where's that session likely to expand to. Not where's the day likely to expand to. That may be helpful sometimes, but if the session is likely to expand in this direction and the day is likely to expand in that direction, then it's high probability, right? If you're trying to trade a retracement leg like this, and the daily is pointing upwards, it's going to be a little more difficult, high resistance, less imbalances on the way towards the draw. Because if we're reversing, there's going to be more imbalances after we reverse. If we are retracing, less imbalances, right? So if we're trading up like this and we want to retrace down, this leg here is going to have way less sibis than if we were reversing in price. We come up here and we start to reverse down, there's going to be tons of more sibis in this range. That's what displacement means, okay? So the difference between a retracement and a reversal, sometimes you can tell by how many inefficiencies are forming on that leg. So if there's a gap down here or something. If this leg, there's a lot of lethargic kind of back and forth, not a lot of inefficiencies. And if I go back to Wednesday's price action really quickly, go to the 1 minute chart here. Thursday. So Wednesday, if you look at the, look in here, okay? Look at Wednesday, retracement leg, taking out stops, and then moving towards the draw. So this is a counter trend move, right, in the New York session. Notice how many inefficiencies, how many sibis are forming this way down. Just maybe a couple. Sure, when we're piercing the sell side, that's normal. But there's a lot of just back and forth that's filling the gaps, displaces, filling the gaps, right? It's not like this where once we reverse in here, look how many more inefficiencies we're forming, right? There's a lot more speed in this kind of price action. Then look in here. What are we doing? We have a retracement leg from here to here. How many inefficiencies are in here? It's very efficiently delivered. Then it displaces, right? Trades up, efficiently delivers, displaces. Efficiently delivered in there, displaces. So all the down moves, for the most part, are trying to be efficient, and then it expands. Efficient, and then it expands. And when you look at price action like that, I think it's easier to interpret between retracement and reversal. When there's 10 a.m. news, do you prefer to enter after the news, or it doesn't matter? The model needs to be clear in the charts. And 9:50. I prefer to enter after the news, no matter what. So 8:30, 10 a.m. For 10 a.m. news days, either it's got to be, if it's like an orange folder, say, or really, really low impact red folder news, then if it's a super clear, 100%, obvious entry, then I may take it. But like 90% of the time, waiting for after that 10 a.m. news, leave like even 1 minute after is going to be just helpful, because sometimes what you'll see is the 10 a.m. news may come in as the manipulation, go against the 5 minute order flow, maybe take stops, or maybe trade into a deeper imbalance where your stop would be, stops you out, and then it continues in the direction that you were looking for. So even just waiting like 1 minute right after the news, see what that news does, comes in, maybe it has a bunch of volatility, takes stops, and then continues in the direction, or maybe it just doesn't do anything, then you would still most times have a re-entry after 10 a.m. where you can get in line with order flow. If you had to start trading again, on what task would you spend the most time, and what will you do to gain the most valuable knowledge? If I had to start trading all over again, I would go back and learn the 2022 model first, which is what I did in the beginning as well. And then I don't really know. I think I would try and form a model that works for me in the beginning. So taking proper screenshots and journaling is going to be important. And then, yeah, I think those are really the only two. Get as much knowledge as I can, and then formulate a model, which comes down to journaling and screenshotting, not backtesting, not going back into old data and trying to look at stuff, but screenshotting the day. And I tell this to everyone who tries to join the group, but tape reading is going to be important. So tape reading, and while you're tape reading, screenshotting things, screenshotting your bias, giving the explanation why it is what it is, screenshotting during the day of this is what I'm looking at. And then after the day is over, going back and deleting everything off your charts and working from the higher time frames to the lower time frames and marking everything up, right? The PD arrays, the bias, this is what this is doing. And then even on the lower time frame chart, like the 1 minute or the 5 minute, whatever you may trade on, marking everything out perfectly, like if you would have seen it in real time, right? Just marking, okay, this is what it did, easily, boom. Now what you're doing is you're taking that experience and you're replacing it over your tape reading experience. And now that's kind of cemented as, this is what I saw, and this is what it actually did. So then you're gaining that actually as real experience. Your brain doesn't know the difference between pseudo experience and actual experience, right? Like if you think about when you dream, you may think that's like a real event, right? When you wake up in your dream, you're like, okay, that was such a weird dream. But in your body, that feels like a real event because you experience emotion, you experience fear, whatever it may be. So just like how if you're not backtesting, but going back and screenshotting and replacing that memory with this kind of pseudo experience, it becomes real experience and it feels like you actually saw it live. So that's how, if you do that for a month, right? You tape read, you screenshot, then after You go back, delete everything off your chart, screenshot that. Within a month, you'll be able to find a model. Like within a month, I was able to make, within like 2 weeks, I was able to make a model that works for me, the ATM model. And like if I were to go, if I wanted to make a new model, like a higher time frame model, I'll do the same thing. Just kind of screenshot exactly what it is. Maybe it's a 15-minute model, something like that. Easily, I could do it within 2 weeks. So gain as much knowledge as you can in the beginning, then start to screenshot what you need to do. So do the work, journaling, all that kind of stuff. Then once you make your model, try and live tape read that for maybe a couple months, demo it, get really, really comfortable journaling and being really, really self-aware, because you can't have self-discipline without self-awareness. So you can't try and be self-disciplined without actually addressing what's going on or why you're doing what you're doing. So reflecting and actually understanding what's the deeper illusions that you have or the deeper motivations as to why you're maybe over leveraging, over trading, that's going to be important. And then just trying to constantly get better as a person. So doing things outside of trading that will increase your mentality and strengthen you, because how you do one thing is how you do all things. So if you're trying to come in trading and be super, super self-disciplined in trading, but then you're not self-disciplined outside of that, it's going to be quite hard to do it. So trying to build yourself outside of trading is going to be extremely helpful. So hitting the gym, reading, or doing things that you can kind of hold yourself accountable, and like you kind of hold yourself at higher value just for yourself. So then it feels like, okay, I must be disciplined. This is my identity. I'm a trader. Therefore, I will do the things that are necessary to succeed. And it's really easy to stay consistent and disciplined if your identity is, I am a trader. I'm extremely self-disciplined. Therefore, my actions will follow suit. Right? If you hold yourself as, I'm an unprofitable trader, I suck at this, blah, 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 you're never going to get there. That's the harsh reality. So the way you hold yourself and the way you carry yourself is going to output the kind of quality and the kind of life that you want to have, right? Like your life is really dependent on how you see the world, and you can shape reality exactly how you want it to be, whether you want to believe it or not. But that's going to be really, really helpful with trying to gain as much knowledge over the short amount of time as just the mindset of things. Weekly manipulation. Oh yeah. Focus all your knowledge over time and price narrative. That's the advice I would give. Yeah, that's true. I would say study like market maker model mechanics, time frame alignment. That's going to be important too. But figuring out like what time frame, bias is going to be like, is going to be so important, right? Because if you can figure out bias in the beginning, 90% of your work is done for you. So figure out what kind of time frames and what you want to learn with bias. And then once you figure out, okay, this is the kind of stuff that I like to see every single day, stick with it. There's two problems that a lot of people have, is either shiny object syndrome, where especially with ICT traders, you try and come in and you see something on Twitter or you see something on YouTube of, oh, this is the next best thing. You try and incorporate that into your trading, or you try and incorporate that into your bias, finding bias. And then eventually you're just stuck in the same kind of path because you're never actually advancing your learning. You think you are, but you're learning something new. You're trying to apply a new trick when you haven't mastered the thing before that. So finding what works for you and then actually sticking to that and getting the actual experience is gonna be really important. So shiny object syndrome is the first part. So if you can kick that out of your life as early as you can, that's gonna be important. Second one is analysis paralysis. So having too much things you're trying to focus on, you got to simplify it down to what really works and what sticks with you. And regardless of what other people say, you know what works for you, right? So someone may look at the charts and be like, okay, I'm gonna turtle soup an 830 manipulation into a 930 expansion. That's not the way I trade. I know that's extremely helpful, and I probably will build a model on that eventually, but it's not something that I will utilize in my own trading and my own bias, because it's not something that I've seen enough where I don't have the experience to use that wisely as something as, I don't know, the 1 hour chart, or like advanced market structure, things like that. Like if I know, okay, this is an intermediate term low, and then you have disrespected PD raise, we're going to be bullish going to Thursday, whatever, things that work for me are not going to work for you, and things that work for you are not going to work for anyone else. And that's going to be the most important part, I think, is just finding your model, because your model is going to be different from anyone else's. Unless you find someone who trades exactly like you or looks at it the same way that you do, it's going to be hard to do. But yeah, focusing on time and price, right? Not getting stuck over the BS things either. like CRT. I'm sorry. QT. I'm sorry. But, you know, models, things that are not ICT vouched for, you should not be wasting your time over, especially if you're new. If you're further on, you want to add stuff in, maybe that's important, but don't focus on things that don't matter. Yeah, long-winded answer. But I don't really have much today to talk about, really. It wasn't really a whole lot of models. If you look at the economic calendar, let me pull up Forex Factor really quickly. We got like news basically all week. So I'll be looking for some of that. Most of my emphasis will be on Tuesday and Thursday, maybe Monday as well. But if you're interested, there is the economic calendar. Also, studying when your setup will be there is going to be so important, because if you know what days you need to show up, it's like a cheat code to managing losses and managing expectations. So once you build a model, you know, okay, this is what I'm looking for. Find out what days is going to be there. Find out what days it's not going to be there. Like, even for me personally, like knowing, okay, Friday, when I woke up in the morning, Friday is not going to be a high probability day. I'm not going to stream on a day like Friday. When I open up, we have a large expansion on Wednesday, Thursday. Friday is kind of just trading within the range. I'm not going to try and force a setup on a non-news day inside of a day where, okay, it's not going to be, yeah, I'll still tape read it and I'll still get my screenshots out of it. I'll still do the work that's necessary. Here's my screenshots from the 1 minute chart that I put in my journal. But it's not going to be a day where I'm going to try and look for a trade. Okay. And here's an example where we had 10 a.m. news, orange folder 10 a.m. news, traded down to the discount end, fair value gap there. You could realistically enter at 10:01 and I would feel more confident about that than trying to hold this, right? Because if you were long maybe and you already trimmed your stop, then that's kind of difficult to hold through. Same thing with, you know, maybe if you're short, it's not the best. It kind of just comes and manipulates. Then after that, you have a decent move back up. Anyways. Yeah, if you want any of those examples, like how to screenshot higher time frames down to lower times, let me know. I'll send it to you in DM. I still got a couple I need to answer, but yeah, if you got any more questions, you can put them in the chat. Otherwise, we'll kind of wrap it up quick. Wrap it up quick. I can't speak. I don't want to take too much time up out of your Saturday. Probably won't do one on Monday then, since we actually have 17 people in here. Yeah, send me a DM and I'll let you know. Yep, this one will be posted on YouTube, unlisted as usual. So, enjoy the rest of your day. Saturday is for reviewing the week, okay? So go back in and review your journals. Don't kind of just write your journal out on Monday through Friday and then never look at it. One of the most important parts you can do is actually reviewing those. So Saturday is for reviewing, Sunday is for planning. Okay, so Saturday you want to go back in, read that, maybe add more annotations into those journals, and then Sunday planning for the week ahead, you know, getting your expectations in line, maybe fixing any baggage you had from the previous week, etc., etc. So take care today, do the work that's necessary. Obviously, get off the charts though, get some rest and do the things that matter to you in life outside of trading, because relationships and all that stuff still matters, right? Because you want to still have those things around when you actually are doing well. So I will talk to you guys on Monday or Tuesday, Lord willing. And until then, stay safe and peace.